All right, let's talk about the one number that's on every Indian investor's mind, 100,000. It's that huge, almost mythical milestone for the BSE Sensex. But is it actually a realistic target for 2026, or is it just market hype? Let's decode it.
So this is it, the big one. Will the Sensex actually hit 100,000 in 2026? I mean, you're hearing this buzz everywhere, right? From serious analyst reports all the way to your investor WhatsApp groups. It's the question everyone's asking.
Okay, so to figure out where we might be going, we've got to know where we're starting from. At the end of 2025, the Sensex clocked in at 85,221. Think of that as our launch pad for this whole 100K mission.
So, what's the gap between our starting point and the target? It's a 17.3% jump. Now, in any given year, that's a pretty hefty climb. It's ambitious, for sure. But is it impossible? Let's see what history has to say about that.
And this is absolutely crucial to understand. The market has some serious momentum behind it. We're not talking about starting from a standstill. The Sensex has been on a roll, posting gains for 10 straight years. A whole decade of upward movement that builds a really powerful foundation for a potential surge.
And if you're thinking, wow, 17.3% is a lot, well, take a look at this. History shows us that jumps like this have happened before. In fact, in 5 of the last 10 years, the Sensex rallied more than 14%. So yeah, it's a big ask, but it's totally within the realm of what's happened in the past. There's definitely a precedent for it.
All right, so if it is possible, what's the recipe? What are the key ingredients that could actually push the market over that historic line? Let's dive into the bull case.
Let's start with a big name, Christopher Wood from Jefferies. For him, it all boils down to one thing, corporate earnings. He's basically saying if we see a solid pickup in company profits, that alone could fuel another 10 to 15% rally. And that, well, that gets us incredibly close to the 100,000 mark.
And you've got Morgan Stanley, and they're even more optimistic. Check this out. Their base case, their most likely scenario, already puts the Sensex at 95,000. But in their best case scenario, what they call the bull case, they see it blowing past 100K and hitting 107,000 by the end of the year. Wow.
And I love this analogy from Dr. V.K. Vijayakumar at GeoJit Investments. He says the Indian economy is in a Goldilocks setting. You know the story, right? Not too hot, not too cold, but just right. We've got strong growth, the government's keeping spending in check, and inflation is low. It's pretty much the perfect environment for markets to do well.
So when you put all these expert views together, you start to see the makings of a perfect storm in a good way. The theory is that money could start flowing out of that super hot global AI trade and look for new homes, like India. Foreign investors might come back in a big way, especially if our corporate earnings stay strong. And all of that could supercharged by this massive, almost unstoppable river of money from Indian pension and retirement funds. That money has to be invested somewhere, right?
But hold on. We all know it's never that simple, is it? Markets don't just go up in a straight line. For every bull, there's a bear lurking around the corner. So let's be realistic and look at what could go wrong. What are the major roadblocks?
Well, analysts are pointing to 3 main hurdles we need to watch out for. First, what if that tech bubble in the US finally pops? Why does that matter to us? Because when the US market sneezes, the whole world catches a cold. Money would get pulled out of markets like ours fast. Second, the US-India trade deal. If that goes south, it could really sour the mood. And third, and maybe most importantly, what if those corporate earnings we've been banking on just don't show up? If that engine stalls, the whole bull case starts to look pretty shaky.
Okay, so that's the fundamental story, the why. Now let's switch gears and look at the technicals. What are the charts, the raw price data actually suggest is happening? Now, before we get into the nitty-gritty, let's quickly talk about moving averages. Don't let the name scare you. All it really does is smooth out all the daily up and down noise in the price so we can see the real underlying trend more clearly. Basically, is the market generally heading up or down?
And here's the good news. Right now, those signals are looking pretty positive. The Sensex is trading above its key moving averages both short-term and long-term. In chart speak, that's a really good sign. It tells us that the core upward momentum is still strong. The trend is our friend, as they say.
Okay, let's look at another tool called Fibonacci projections. Now, this sounds complicated, but the concept is simple. It uses key mathematical ratios based on past market swings to project where the price might go next. You can think of them as data-driven guesses for future support and resistance levels.
And for 2026, these projections point to some serious upside, potentially hitting as high as 94,325. Now that is really close, but notice it does stop just short of that magical 100,000 number.
All right, we've heard the arguments for, we've weighed the risks, and we've glanced at the charts. So let's pull it all together. What's the final takeaway on the Sensex hitting 100K?
So let's break it down. The case for 100K is really strong, right? It's built on a solid foundation of potential earnings growth and huge amounts of money flowing into the market. But the case against it is also very real. We can't just ignore global risks or the possibility that our own domestic performance could wobble. And what do the charts say? Well, they're showing a healthy positive trend, but they also hint that we might end up just a little bit shy of that 100,000 goal for 2026.
So, the debate about if we'll hit it and when we'll hit it, that's going to keep going. But maybe there's a bigger question here. Forget the number for a second. What would a 100,000-point Sensex actually mean? What would it say about India's economic story and our place on the world stage? Now that's something to really think about. Thanks for joining this explainer.